Hi everyone, hope you're all doing well, and today I'm going to talk about the best SPAC stock to buy on the stock market right now. So if you can smash the like button, subscribe if you're new around here, and I'll talk about the best SPAC that I think is on the current stock market right now. So first of all, I'm going to say sorry if there's a little bit of a noise that gets picked up with the microphone. It's like a construction site outside my window right now, so if there's any like drills or anything like that drilling away, I'm really sorry about that. They've decided to put some new pipes down right outside where the window is, so hopefully the audio is okay. Hopefully we'll finish with that in the next few days and it's not a problem, but like I say, hopefully you guys can't hear it, so we're okay there. But I'm going to talk about the next big SPAC in my opinion, which has the ability to be as good or as big as DraftKings, which if you saw the success of DraftKings over the last 12 months, it's been absolutely amazing. And very much like DraftKings, this company is currently sleeping a little bit at the moment, just like how DraftKings was, but I think it has the ability to shoot up very soon. Now, I did start buying this company earlier in the week, so if you want to keep up to date when I'm buying and selling these companies, then you need to join my patrons group. Link is in the description. I always post what I'm buying and what I'm selling. As well as that, there's some portfolio reviews on there, some exclusive content on there, a Discord group on there. There's a lot of content for the money you get with the patrons group. So if you want a bit more information and notifications when I am buying and selling companies like this one that I did earlier in the week, make sure you join through that link in the description. But we'll take a look at this SPAC stock. So the SPAC stock is Flying Eagle Corp, and it's going to be merging with the company that is called Skillz. Now, I'm going to say this is a high risk, high reward company, and that should be taken into consideration. Sometimes you've got to be careful because, I do talk about some high risk, high reward stocks, but these companies never make a massive amount of my portfolio up, smaller than 10%. At the moment, I've got no high risk and high reward stocks in my portfolio. So I was like, let's spice this up. Let's find a SPAC stock that we can put in here. And this is the best one that I found. So even though I do like it, I do want to make that very clear. It's never something like going to make up a position size like Facebook, for example. Even though I hardly talk about Facebook, that's a great core holding, whereas this is a little bit more of a smaller play with high risk, high reward. So Flying Eagle Corp is going to merge with Skillz. The merger vote is on the 16th of December, so hopefully we get the merger confirmed on the 17th and the ticker symbol will change and everything like that. So it is up and coming, so hopefully everything like that goes through, but just thought I'd make you aware of that because sometimes that can be something that might affect your decision making with a lot of these SPAC stocks. But like I said, the last SPAC stock that Flying Eagle had was DraftKings, and look how well that one's done. And Skillz is a very similar company to DraftKings. So first of all, what does the company do? Well, it's involved in gaming, mobile gaming, esports, and also it has a little bit of a wager. So basically people can go onto this platform where it has developers that develop games, and these games have increased over the last few years, so there's more and more games on here that are very popular. And I've got a page from the investor relations here where you can see what happens is gamer 1, gamer 2 put in an entry fee, and then that prize is given out as a profit as a result of winning the game, which is in fact a little bit different to gambling laws because of it being classed as gaming and having a prize. So this means that this company is allowed in like 40 states at the moment, which is pretty good. And then that entry fee that comes out goes as a prize, for example. And then what happens is Skillz take a percentage of that gaming revenue that came through and they keep that. And obviously that revenue goes to profit with 95 gross profit margins. And then obviously you got your operating expenses and everything like that. But that's roughly how the business model works. It's a gaming platform where you put an entry fee and then you can win prizes for playing games, basically. So it's like an esports gaming platform, the first one on the stock market to be doing this. So I think this could be a massive area because you think you've got gaming in there, a lot of games that are going to be out. You've got competition, esports, prizes, tournaments. This could even turn into a bit of a streaming platform where you watch people gaming, where you have major tournaments. So I think it's only just getting started, this business model. I like where it's at, the kind of mobile gaming space, something a little bit different, going for prizes. And then, you think about, you can start doing a bit more like advertising in this platform. You could do, more video streaming in this platform, be a bit more of a community space. I think this has massive legs to grow. So the ticker symbol is FEAC. And like I say, I started buying this earlier in the week, around about $15. And right now it's around about a high $15. I mean, it might change. It looks like it's up a little bit of pre-market as recording this, but like you know, with these Spac stocks, it can change so quickly. And before I get into the investor relations, I just want to say what an amazing Q3 this company had as well. There was like a 90% revenue growth on this company, which is amazing. And I think it's only really unprofitable because of the marketing. You look at the marketing costs. If this company didn't put up its marketing costs in Q3, this company would more than likely have been profitable. So yeah, I mean, it's very close to profit. Only unprofitable because it's up in its marketing, which I don't mind, because to carry on being competitive, it does need to ramp up that marketing side of it. And one of the things that it does here, for example, is it pays people like Floyd Mayweather, and it pays Floyd Mayweather to like endorse it, does like tournaments involved with Floyd Mayweather and brings people in. So from that point of view, you know, it's doing great marketing, bringing people in like that. It's getting great partnerships. I think the NFL is one of its partners as well. So, you know, using them sort of people to bring people into this platform is going to be absolutely amazing. And it's not just having 90% revenue growth because of the COVID situation. Historically, it's pulled out that revenue growth as well. So that's a key thing to note down. So this is the investor presentation for Skillz. So you can see here the future of entertainment. And one of the key things you've got here is the minute per user per day. So you can see here Skillz has 62 minutes compared to TikTok on 52, Facebook on 41, YouTube on 40. You can see people are staying on this platform here. And it's getting a lot of time on this platform, which I think is a very key point to put out there. And we can see here best in class results and recognition. You see 2020 revenue, 225 million. This company's pulling out decent revenue growth. You know, this is a company that's a serious company already, not like some of these Spac stocks where they've got no revenue and there's nothing coming in for the next 2 years. Company's pulling out 225 million in revenue already, which is phenomenal. And you can see here 19 to 20 growth revenue, 88%. And like I say, this has historically been very similar as well. And also a couple of awards that it's won previously. And we can see here the industry, you know, are we in a growing industry? And you can see here gaming currently worth 149 billion and it's growing at 12%. And what's really key here, you see mobile gaming, 68 billion, and that's growing at 20%. So you can see mobile gaming is actually the fastest growing industry in the mobile gaming is the fastest growing industry in the gaming industry, which is massive. You know, I don't have any sort of stock or anything in here like a mobile gaming site. So yeah, I mean, previously, Turtle Beach, I guess, and that's streaming, but not an actual mobile gaming platform. So I really like this area because of how quick mobile gaming is growing. And this is the business model that I showed earlier. You know, people paying entry fees, you get the entry fee out and you get paid it. And like I say, it's not classed as gambling because it's a form of skill compared to where gambling's kind of like potluck, I guess. So yeah, you can see that that's how the business model of the company works. But like I say, you know, this company can develop more to tournaments, for example, and everything like that. Bigger prizes, you know, have people endorse their platform like Floyd Mayweather, which they've done before. And this is the proposed transaction summary for Skillz. So you can see here, Flying Eagle Acquisition Corp is a publicly listed special purpose acquisition company with over 690 million of cash in trust. FEAC has agreed to combine with Skillz based on a 3.5 billion pre-money equity value, which is kind of key because we've got no like enterprise value, but a 3.5 billion equity value. Historically, annual revenue growth of over 100%. Andrew Paradise will hold approximately 18% of the equity post-transaction, which is the founder and CEO. 24-month lockup, so it means that there's not going to be many people being able to sell out of this company, which is pretty good as well. Skillz will maintain post-closing dual classes stockholder structure with super voting rights for Andrew Paradise at a ratio of 20-1. After giving the effect of the transaction, the company will have approximately 250 million of unrestricted cash with public equity currency to accelerate growth. So we'll know there's a lot of cash on the balance sheet. And with that cash on the balance sheet, it's very healthy on the debt front as well. And when we look at what money the company's burning through, it's only like 20 million a year. So, I mean, this company has enough cash to burn through losing money at the current rate for like 10 years. So fantastic balance sheet this company is going to be coming out with as well. So that's how the current Spac stock will work after the merger. So just a little bit of a comparison so we get an idea of what this company is like compared to other companies. You can see here a list of companies that are very similar. The big one on here that I want to focus on is like DraftKings, because obviously we're trying to look, I think that's the one we're trying to compare to, it's the previous SPAC stock and how successful it's been. But we can see here at the moment, Skillz is outgrowing DraftKings, which is very important to notice. We can see the equity value ratio to the 2022 revenue, which is key compared to something like the current revenue, for example. But you can see here Skillz compared to DraftKings, once again, a lot cheaper than what's going on here. And once again, we can see equity value compared to 2022 gross profit. Skillz is a lot cheaper than what DraftKings is. Very, very cheaper. DraftKings is something that's probably not going to make profit for the next 3-4 years. This is going to be making profit in 2022, which is very key to write down. And just in general, you look at Skillz, the price to sales ratio is going to be pretty cheap. The revenue compared to the actual equity value is very cheap as well. So like I say, on the ratio side, it seems pretty cheap. And this is the forecast of previous years of revenue as well. Sometimes with SPAC stocks, you don't get any of like previous kind of information, and up to 2022. So you can see here the revenue side of it, 17 million, 51 million, 120 million. Look, I mean, that's not COVID numbers. That's actual growth pre-COVID. Look at that sort of growth. And then you see 121 million to 225 million this year, 366 million. And then 2022, we're going to have a 555 million company. It's pretty good going, And then you get obviously the gross profit, you get adjusted Ebitda. So you can see here that the key thing is 2022. We're going to have about 8 million here in adjusted Ebitda, which is really key. Bit of a big cash burner through this year. I think obviously to do with a lot of marketing, for example. And then, overall, very strong. This company's not burning through a lot of money. That's the key thing. It's not burning through, and we've got profitability, I guess, within like the next kind of year, really. So, overall, the future looks very good for this company. So overall, I do believe that this is potential the next closest thing to the next DraftKings that we have on the stock market. Great company. It's the share price hasn't been like woken that much yet, compared to very much like how DraftKings were. Massive growing revenue growth, proven business model that's grown previously historically massive in revenue. You look at that 2017, 2018, 2019 numbers. Huge growth in this company. The valuation's pretty cheap on it as well, Let's not forget this is a cheap valuation compared to some of the SPAC stocks we've seen out there. So overall, I think this is a massive company, and while it's at this sort of prices, if it stays here over the next kind of 12 months, I'll be happy to keep buying a little bit more of. I just don't know how much that kind of SPAC hype will come into this one, and then it might go up from here, but we'll see what happens after the merger. I think the merger could be the key thing that gets people like, right, the merger's done now, let's start buying. So we'll see what happens over the next 2 weeks, I guess, with this one. But at the moment, I do believe this is probably the best SPAC stock out there. So hope you found that useful. Hopefully you take a look into it. It's a company that I have been buying, so hopefully you found something information out here, and smash that like button, subscribe if you're new around here, and I'll see you in the next video.